Trader PhD's Commodity Chat podcast series, bringing you the latest trends in U.S. and global commodity markets, from grain prices to livestock trends, exports to weather impacts. We cover what matters most to your operation. Let's dive in.
Hello, everyone. Nick and Dawson here from Trader PhD, recording another commodity chat. This week, we're going to talk about what happened this week. This is Friday afternoon. What happened this week, everything from weather to potential trade, and give a look towards next week. So, Dawson, weather-wise, what caught your attention this week?
Yeah, I mean, this week it kind of feels like things might be starting to shift from, seeing a lot of good conditions for much of the growing season, seeing good planting, seeing good early establishment, to weather really catching a lot of eyes and a lot of attention this week when it comes to upcoming heat waves, the potential or non-potential of precipitation next week. Are we truly going to get some drier signals? That has yet to be seen. But again, the focus seems to be on the heat that is expected to build this next week. A lot of overnight lows for the forecast are showing to be a little bit on the higher side. And I don't know if you can shed the light for me on this one too, is, from the crop perspective, kind of how is that important? Why do producers care? Why might the market care?
Yeah, so the overnight lows are very important to kind of give that, especially on corn, to give that plant a break from working. Temperatures get down to a certain level, it lets that corn just relax and take a break. It triggers it to just relax, and that time off, that rest, gives it the ability to work even harder the next day and keep filling grain. So it is important. This crop hasn't had that much stress on it yet. Personally, for me, I'm personally not too worried that slightly warm temperatures for right now, a short period of time, is going to completely hinder this crop. And for right now, it seems like most of the heat is going to be centralized, not as much in the traditional Corn Belt, more in the central southern plains type area. Yes, obviously there'll be heat drift up into the Corn Belt, and that's kind of where we're seeing that. But I think for now, the market could be pricing in obviously some of this risk, and as it actually unfolds, we'll see what actually happens when the rubber meets the road. Does it stick around longer than it should? Does it get a little bit hotter than it should? Where does the high pressure system really set up? Is it a little bit more north, a little bit more east, and really, cause a bit more stress through, the I states particularly? So, yeah, we just got to watch not only the models, but actually what happens.
And you brought up, what actually happens. And, I don't know if you've seen it, but Eric Snodgrass, who we interview every week, he threw up on social media of having just an observation coming from the last, 130 years or something like that, of looking at those temperature rankings for just this last little bit just these last couple weeks, showed a lot of high temperatures for parts of Iowa, or like a corner part of Iowa, big sections of Illinois, big sections of Indiana, and even getting into Ohio. And so, like you said, depending on where this high pressure system sets up and brings that heat in, I mean, you could be talking about some stress for areas that have already been seeing above average temperatures that are, probably already adding some stress, especially for those, those pockets of the Corn Belt that have seen below normal precipitation this season. So is it enough to really spur a large reaction from the market? I don't know. But when you're talking about individual producers, I mean, you could seriously see some issues here.
Yeah, and it's got, it's all like, just like futures markets always do, right? It starts trying to figure it out before we get there. Liquidity to drive this market lower really started to dry up last week, and obviously that continued this week with the bounce that we had this week. And so, as we move forward, the market is looking at, on paper, a tight balance sheet situation. And, we've sold off since February with the idea that, Brazil going to have almost a record crop. And then once we transition out of kind of knowing that, the market was looking at our record crop, and that balance sheet may not get any worse. And so that's kind of why we've sold off like we have, really just broadly speaking. So for the market to finally start pricing in a little bit of production risk here, I think is past due and appropriate. And we'll just kind of see if there's follow through.
Yeah, and we talked about those massive corn yields that were coming in recently from just different private analysts and a lot of other people kind of looking at, possibly what are the funds looking at with their models, big estimates on those corn yields. And so, yeah, it got tossed up here just this last week of, are these massive yields that got thrown out there? Is that as high as we're going? And so at this point, can we only work down from here, which would ultimately bring our production estimates lower. It would bring our ending stocks estimate lower. So that kind of leaves us, continuing to watch out for those demand factors if we are pricing in those supply risks.
Right. And, it is interesting to look at the potential supply that's there versus what's, projected on the balance sheet as far as, ending stocks is concerned. Even as relatively tight, we've been trending tighter and tighter and tighter since last year. There's, that's no secret. And really, even this new crop balance sheet is in a smaller way continued to tighten over the past couple months. Price action would tell you that the market wasn't that worried about that balance sheet. And then really even the spreads would tell you, with as wide as a carry that there is from December, Jan, it's actually not all that worried either about supply. So to me, just all in all, weather is going to remain a concern here over the next couple of weeks. But I think ultimately, just, if we tune out a lot of the noise, a substantial crop is going to be grown and harvested, barring some sort of, multi-million acre, derecho event, or, just excruciating heat, just unrelenting to really hamper pollination. So, but with that being said, the market obviously going to continue to watch that. And then obviously the next big thing on the list is trade. Trump delayed, retaliatory tariffs from the 9th to the 1st. The 1st is 2 Fridays from now. Could the market be front running some potential trade deals there too?
I mean, maybe. It just seems like there still is a lot of uncertainty. And again, I think I said this last week, is that when we say trade deals, these are not real trade deals. This is not in set in stone promise for a country to buy so many agricultural goods or so many billions of dollars worth of agricultural goods. I mean, we did get a trade agreement or tariff agreement, as you might want to say, out this week from Indonesia. Chad had mentioned that in his broadcast too, is that, Indonesia did kind of agree to maybe actually put a little bit of a number on what it wants to purchase for U.S. agricultural goods to appease Trump and try to make sure that their tariffs are not too high. Specifically, when you look at kind of what Indonesia does, they're a big purchaser of soybean meal, a lot of those soybean crush products, and that's why I think, or that's why we put something out in a broadcast that might have been a little bit supportive for the soybean complex this week, just on the pure fact of we're trying to find different sources for our products in the absence of China. Maybe Indonesia can come in, maybe some of these other countries can come in. And so, yeah, to your point of, are we front running more trade deals? Yeah, it'd be nice to see some more countries that, either are traditional buyers that agree to purchase more, or non-traditional buyers that might agree to purchase things from the U.S. that they haven't always purchased from the U.S. Specifically, when it comes back to that Morocco deal, they want to buy some U.S. wheat, not because they just want U.S. wheat, but because our prices are so bad compared to the world now, that they're like, okay, this actually makes sense for us to do that because we can be in this market.
Especially when you factor in exchange rate. That was, Morocco wasn't the only one this week that, I saw comments on that, basically, a U.S. bushel of wheat it's on sale, not only in, price, FOB, but also based off exchange rate. So the slide in the dollars definitely helped that. So there is definitely a positive story there on wheat. Old crop wheat exports, I think, on the last WASDE were slightly increased because of some pace. And really, if we can kind of keep building that book of business there's a sliver of some good news there for wheat, and then kind of a backdoor way of supporting corn. But not to get too off topic here, just kind of stay on trade just a little bit. Beyond that, the EU rhetoric has really heated up this week, which is kind of disappointing to me. A lot of member country heads are definitely trying to draw a line in the sand on what they will and will not tolerate, and how they're going to retaliate, should we impose tariffs. And man, none of that is really good news. Hopefully here over the next week or two, cooler heads can prevail and we can kind of get that sorted out. So moving on from there, price action this week, anything specifically stand out to you?
I mean, you want to talk about a leader for the week. I still liked soybeans purely for the fact of, kind of looking at the soybean oil. There just seems
Okay.
to be, I don't know, there just seems to be a lot of optimism in that complex still when it comes to the biofuel side of things. Are we going to get some set in stone mandates? We just had those hearings on July 8th, 10 days ago, of biofuel groups and ag groups encouraging the EPA to stick to, their lofty proposals that they came out with, and then also maybe trying to get a little bit more some favorable for, are we going to get some SRE exemptions or not for small refineries that are applying for those? Or can we continue to just see a little bit better of a basis for overall biofuel demand? I don't know. It just seems like hitting fresh contract highs or this week just seems like an optimism for me.
Okay. I mean, I feel like soybeans were a couple days late to the party. Yeah,
Yeah.
to call them a leader. But yes, for soybeans on, I think that was what, Wednesday, wasn't it? Yeah, Wednesday, in what I would call aggressively get back up on top of my line of support, which is about that 1013 level. It got back on top of that with a purpose. It's had follow through buying. Yeah, granted, it bumped its head today on some minor resistance at the just call it the 200-day MA. Overall, that market does seem uninterested in moving down for now. Obviously, yeah, I mean we talked ad nauseum with the 45Z passing, and then the blending mandates and all of this. So that market long term, and with as tight as the potential balance sheet is, and then now we're gonna try to, no pun intended, pour some fuel on that fire with increased usage. That's definitely could get to be a spicy market in the months and price cycles ahead. So, but I wanted to touch
I
on.
know you want to talk about corn, didn't you?
I want to talk
Yeah,
about corn.
let's talk about corn.
Corn. Last week after the commitment of traders data was released, I had this very slight, from the data that I watch, in that I was very optimistic, and I had to temper myself to not get too excited because I wanted to see this week's trade. And wouldn't you know it, lo and behold, big gap, or not a big gap, but gap open lower Sunday night, traded down, but then took out the entire, not quite the entire week's trade, but 3 days worth of it, in one trading day on exceptional volume, and just refused to trade lower. And man, I put those two things together, and I really did get excited, at least here in the short term. Today, we tested 430 officially here on the D's, and didn't get completely rejected, but it found some, it found some inventory there, which is, I think, to be expected. But really optimistic there. And then you kind of couple that with, we took kind of all week to do it, but we finished its week strong, on a high note. And so, hopefully moving forward, looking at next week, we can really challenge some of these resistance levels, and, as producers and advisors, really decide what we want to do from there, right? Is this a hedging opportunity, or, do we blow through those and get even better hedging opportunities here pre-harvest? So gonna be watching that moving forward.
I mean, you're really, when you're looking at the commitment of traders, kind of the long-term picture is pointing out, are we looking at a possible, change from current conditions or trend reversals type things. And when we posted those February highs, we saw this large, massive fund position, as people like to be quoting, or the funds, is that was building and building and building and building throughout February. All of a sudden that was let go. And then so since then we've been doing kind of the opposite on the fund position side of things. And I'm assuming from what you see, it kind of seems like a little bit more of a positive development in terms of, okay, are we pausing this fund selling or a commercial buying that would allow us to maybe get off these lows, essentially?
Yeah, so definitely saw the beginnings of and we'll get more, data here in a little while to see how, this next week panned out, to see if we got a continuation of it or not. But, it definitely, how I will describe it, it definitely seemed like the liquidity was drying up at lower prices. Now, that can be indicative of a reversal, but it could also just be indicative of, a pullback in trend, and just kind of shuffle the deck and then continue later. So again, you just got to have to kind of keep monitoring the situation and keep watching it, and we'll see how it kind of unfolds moving forward. Anything else on price action catch your eye this week, Dawson?
I mean, I don't know how you interpret it, but cattle continuing to hit their new highs this week just seemed impressive again. Cash really seems to still be leading this thing higher. People still want to buy calves. People still want to buy fat cattle. We see the packers continuing to bid for it, because essentially, as we continue to see good economic data, it doesn't really seem like the consumer has much of a reason to back off from current demand yet.
Yeah, I mean, boxes have backed off a bit, and I know
Mhm.
this is going to start squeezing margins for sure on the Packer side of things, and we'll kind of see how this unfolds. Personally, for me, I think the jury's still out on, whether the seasonals are going to rear their head or not here in the cattle market. Obviously, when supply and demand fundamentals get extreme, seasonals do not matter. A lot of times cash is going to be the last thing to turn. And we've seen spreads turn a bit. We've seen boxes turn a bit. And seasonally, it's time for a pullback. So again, I think the jury's still out on it.
I mean, if you want to look at other stuff coming in too, it's like, how much more bullish data can we get?
That's true.
And I think we talked about this either last week or the week before,
Corn.
that we were talking about, we've gotten all this data, we got more screw worm data coming in that, we're closing the border again after having it open for just a few days. I saw weekly data too, for feeder cattle imports from Mexico.
Yeah.
4,000 across the border. And I guarantee you that's the only 4,000 that are getting across that border until, we open that thing back up in who knows how long. And, we're going to get the next cattle inventory report, that biannual one here this next week too. That's like, how much more bullish news can you really throw at this thing?
So, like we were talking like a week or two ago, whatever it was on corn, at some point, either all the bullishness or all the bearishness on corn, specifically all the bearishness of a big crop coming, eventually gets priced in, and everybody who wants to be short. And so the same thing on cattle. Everybody who wants to be long is long, at some point. And the deck's you gotta move the deck chairs around just a little bit to either be able to add more length or to have, a consolidation period for it to sell off. So to me, the momentum just doesn't seem to be pushing on through. I know that it could still go either way. If I was a producer, I would still want some sort of coverage on, probably to some extent, maybe not, 100% or whatever. And that's between, you and how you manage your business. But I think it's still a 50-50 on what we're going to do from here. So we've got price action from last week. What about looking towards next week? Anything that we'll be watching next week?
I mean, I think just continuing to watch to see how this weather shapes up. You get, again, like you said, models is one thing. Seeing what actually happens is another thing. When I interviewed Eric last week too, he was talking about this, there's a lot of juice, is what he put it, in the atmosphere of potential for severe storms with this heat coming in.
Yep.
Is this going to stir up a lot of severe thunderstorms? Is it going to stir up tornadoes? Just keep in mind that, there are some chances of these things occurring this next week. Whether that happens or not, I am not sure. But yeah, just something to kind of keep an eye on, if, kind of seeing how the heat progresses, kind of seeing if we're going to continue to maybe get some moisture in pockets that have been dry. I mean, we're still in a weather market, seeing where things are shaping up, and, corn crops made in July, soybean crops made in August. Take it as we go.
Yeah, yeah, I would say, obviously the two big things we've been harping on, this entire, session has been, weather and trade. So I think next week is going to be continuation of that. And, did we build enough momentum to really challenge some of these resistance levels? I sure hope we do, or did, get enough momentum to challenge some of that. And then obviously, again, I'm kind of hoping the powers that be around the world can figure this trade deal out and put their pride aside and keep their country's people, best interest in mind. And I don't think it's gonna be helpful for anyone to get into, just a global trade disruption. And we saw, look at prices, the last time that we got into an intense trade war with China, right? As far as our commodities are concerned, it was not a fun couple of years. So hopefully we can avoid that. Anything else you want to talk about this week, Dawson?
I'll leave with this. I mean, something we didn't mention with the trade deals too is that there is still optimism with China. Take it as you want.
Yep.
Take it with a grain of salt, even at that, if you want as well, just because that, I guess, also might have brought some optimism this week, is that we might get a trade deal with China. Trump has talked about a potential summit with them. So I don't know. Maybe. Do we have a phase 2 deal coming? I don't know. I think that's a little bit of a stretch, but I mean, anything that would just help us with our demand. Still waiting for China to pop up in those soybean sales sheets.
All right, guys. With that, we'll be here next week, keeping an eye on things for you. I'll try to get you guys updated either at the end of next week or that following Monday, and we can go from there. With that, have a good week, and we'll talk to you guys soon.
Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.